Are ESG ratings accurate for ethical Jewish investing? Imagine trying to find a company that truly aligns with your values. You want to support businesses that promote social justice, protect the environment, and follow ethical practices. But how do you know if the ratings you see are reliable? That's where environmental, social, and governance ratings come into play. They are designed to evaluate how companies perform in these areas. However, their accuracy for ethical Jewish investing has some limits. ESG ratings look at factors like environmental impact, labor practices, and corporate governance. They can match some Jewish values, such as supporting fair labor, environmental care, and good governance. But they don't always cover everything important in Jewish ethics. For example, Jewish law may exclude companies involved in activities like gambling, tobacco, or weapons production. ESG scores might not fully account for these concerns. So, while they can be a helpful starting point, they often need to be supplemented with specific screens based on Jewish principles. Another challenge is that ESG ratings vary a lot between different providers. Each uses different methods, data sources, and weights different factors. One company might get a high ESG score from one agency but a low score from another. For Jewish investors, this inconsistency makes it harder to rely solely on these ratings. Additional research and custom screening are often necessary to ensure investments align with Jewish values. Bias is also a concern, especially regarding Israel. Some ESG ratings have been criticized for unfairly rating Israeli companies or those doing business with Israel poorly. This bias can conflict with Jewish support for Israel's security and economic growth. Jewish organizations have called for more transparency and fairer assessment methods from rating agencies to address this issue. Many ESG funds exclude defense companies because of weapons and environmental concerns. But for Jewish investors, supporting Israel's defense is often a priority. This creates a conflict because exclusion might mean missing out on companies that help protect Jewish communities. Since ESG ratings don't always consider this nuance, investors need to evaluate holdings carefully beyond just the scores. For practical application, Jewish investors often use ESG ratings as one part of a broader screening process. They might exclude companies involved in prohibited activities according to Jewish law. They also look for companies that support social good, environmental efforts, and good governance in line with Jewish values. It's also wise to watch for biases, especially regarding Israel, and advocate for fairer rating practices. Consulting with advisors familiar with Jewish values-based investing can help tailor portfolios to meet these principles. In short, ESG ratings can be useful but are not fully accurate or enough on their own for ethical Jewish investing. They should be combined with specific screens rooted in Jewish teachings on justice, charity, and support for Israel. Being aware of biases and differences in methodology helps ensure your investments truly reflected your values.